Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into something you can actually understand. Today we're diving into DigitalOcean's latest quarterly report. Will it be smooth sailing, or will we find them swimming in the deep end with some financial sharks? Let's find out. This report is important because it gives us a peek at how DigitalOcean, a cloud computing company, is performing. We're going to break down the key numbers and see if they're living up to the hype. If you find this kind of analysis helpful, make sure you subscribe and check out our Discord channel linked in the description for more discussions. Alright, let's jump right into the numbers. We're looking at the period that ended in March of 2025, so this is a pretty fresh report. Let's start with a quick look at the balance sheet, which is like a snapshot of the company's assets and debts. One key item to note is accounts receivable net, which represents money owed to DigitalOcean by its customers. We see about $76.6 million. Think of it as the company's IOUs. This is slightly more than the roughly $72.5 million the company's IOUs. This is slightly more than the roughly $72.5 million they had at the end of the previous year, which is December 2024. Next, we have property and equipment net. That's $45.9 million. That is up a little from $432.5 million at the end of last year. That represents things like their servers and infrastructure, which are vital for a cloud computing platform. So all that's good. Now let's peek at the other side of the balance sheet. Liabilities or debts. Total current liabilities, meaning debts due within a year, is about $190.3 million. That's down from almost $200 at the Bollinger $3 million. What's at the end of last year? That's some good news. And looking at the very bottom, we can see total liabilities and stockholder equity being roughly similar this year and last. At $1.64 billion, this is important because it shows what they have minus what they owe is relatively consistent. Now let's switch gears and check out the income statement. This is where we see how well the company is actually making money. Revenue, or total sales, comes in at $21.07 to same period from last year. Revenue last year, that is March 2024, was roughly $184.7 million. So they've grown. That's an increase of about $26 million, which is a solid jump for 1 year. Moving on to gross profit, that's revenue minus the direct costs of providing the services. DigitalOcean's gross profit is about $129 a year, shows growth. Their gross profit was about $9. What's most important here isn't just the raw numbers, but their ability to make each dollar of revenue more profitable. Now let's talk about operating income. This takes into account all the operating expenses, including research and development, sales and marketing, general and administrative. It sits at $37.6 million. That number was $11.5 million last year. This means they're not just selling more, but they are becoming more efficient at running the company. This is very good news. Finally, we have net income, which is the bottom line. What's left after all expenses and taxes? DigitalOcean is reporting $38.2 million in net income. What was the trend on net income again? The net income attributable to common stockholders last year was $14.01, so they have nearly tripled their net income in a year. This suggests cost controls or increased margins or both. Either way, also very good. Let's briefly touch on earnings per share EPS. Basic EPS is $0.42, while diluted EPS is $0.49. The difference here is diluted. The difference here is diluted takes into account things like stock options, which lower value per share. That looks good considering they had $0.16 and $0.15 respectively in basic and diluted earnings per share. Now let's shift to the cash flow statement, which tells us about the actual cash coming in and out of the business. Cash provided by operating activities comes in at $64 million. That can be compared to $66.7 million last year. That's a slight dip, but still pretty good. And finally, net cash used in investing activities sees them spending $64.9 million this year, compared to earning $46.4 million last year. These investments are long-term bets. Looking at the financing activities, we see that they spent $67.1 million versus $11.2 million. This has to do with things like stock repurchases. Now we are done with the numbers and can switch to some of the risks. I want to note something interesting here at the very beginning, however. No preferred stock is outstanding or issued according to the document, so that simplifies things and it means management has faith that they do not need special class stocks. Now, here comes what could go wrong. DigitalOcean mentions lots of risks. These are uncertainties that could impact their future. Things such as if unfavorable conditions in the economy, both in the United States and abroad, including conditions resulting from trade tension and or the imposition of trade tariffs, could cause a decrease in business investments in information technology and negatively affect the growth of our business and our results of operations. Finally, there was a change to one of the insiders' trading plans. They terminated one after a couple months. Insider activity should always be carefully watched. So what's the story here? Overall, DigitalOcean shows a quarter of very good revenue growth and increased profitability. They are making more money as a company and their expenses are lowering. Now for my take, first off, you can tell they're being disciplined with their spending. That jump in net income is hard to ignore, though a rising interest rate environment still is a small concern. They also seem to be managing their data center costs. However, they mentioned that this year's increased margins came from their decision to extend the average server time so they can only delay the expenditure for so long. The question I still have is about their competitive position. The cloud market is crowded. While they seem to be targeting smaller firms and developers, there's still a question on how long they can keep their niche before the Amazons and Microsofts really start to move in. They do have a plan to keep improving, but it depends heavily on the management team to pull through and stay ahead of the curve. Alright, that wraps up our analysis of DigitalOcean's latest quarterly report. What do you think of these numbers? Are you bullish on their future? Drop your thoughts in the comments. If this breakdown was helpful, hitting that like button really helps. And don't forget to subscribe for more insights into the corporate world. Check out the Discord channel in the description. Thanks for watching, and I'll catch you in the next one.